Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is my Varshajani, and you wouldn't have guessed which stock we're going to talk about today because it's a sector where the leader, which is Indian Hotels, has done 7.5x since April of 2021. So in the last 4 years, if you would have invested in an Indian Hotels well after COVID, Mahima,
Yes.
it's a 7.5 bagger for you, which surely moves the needle for most of us. So that's why this one becomes interesting. It's the most recent listing within the hotel space after the Leela, obviously.
Yeah.
But ITC Hotels is the one that we're going to be talking about today. What I want to know about ITC, I want to first understand whether it's a good play within the hospitality space. There are plenty of options. I want to understand whether this one is the good one because the potential is large. The re-rating has been significant. So is this a good time to really enter in the hospitality space? Second one, they're doing a huge pivot. They are moving from the current ownership model towards management contracts. What's the margin upside here is what I want to understand. The third one is free cash flow. What's the kind of growth expectation which one can expect on the free cash flow front going forward? Largely because all of the free cash flow that will come onto the balance sheet will likely be utilized somewhere because it's going to be Capex light in terms of the model that they are adopting. Sustenance of the low Capex goal. So hopefully no large Capex plans by the company. What do they do with the excess cash therefore? So it's more of the free cash flow that I'm going to talk about. What's the applicability of that? What's the outlook like? How quickly can they grow? I also want to know the basic, right? What's the margin play between an owned hotel and a managed hotel? This is something I have been consistently talking to you as well as trying to understand. But we're not getting a clear answer, and hopefully we'll get an absolutely clear answer because that pivot from owned to managed is going to be large, and that's why I want to know what the margin profile is like. How likely is demand to exceed supply? We're reading lots of analyst notes which are talking about demand outstripping supply in a large fashion. Now, ITC is well placed to ride that wave, but how likely is that to even happen? Because valuations have built in some bit of positivity, but you want to understand the likelihood of that playing out. So all of that and more is what we'll talk about. Let me first start off with what the company does. And we'll start right from the very basic. It's a 50-year-old hotel chain. It was started by ITC Limited, of course, from the cash flow coming in from the cigarettes business in 1975. It now owns and manages 140 hotels. The first hotel was started in Chennai. It's demerged from ITC Limited in Jan of 2025. The ascribed value, Mahima, was around 270 rupees. So currently trading at a discount. So that's the other thing that's very interesting. And it's the number 2 listed hotelier in the country, brand-wise as well as size-wise. And that's saying something because India's penetration in terms of hotels is very, very low. So this could well be that play. Let's talk about the models in the hotel industry and what's really led to this large turnaround, right? It's been a significant turnaround and IHCL has been at the forefront of that. ITC, of course, has ridden the wave because of the fact that a large part of the valuation was captured inside ITC Limited and has now come outside ITC Limited. But firstly, is the brand name, is the own hotels business, where the hotel is actually owned by the company. Like, for example, an ITC Hotels owns the hotel itself. So it's a Capex heavy business. Brand name is owned by the hotel, Capex done by the company. So if ITC were to do the Capex itself, it's a heavy Capex business. The management, marketing, as well as operations completely managed by the hotel chain. Let's talk about management contracts now. Owners retain property rights. So there are now two parties. One is the owner, one is the hotel manager and the brand. So the owners retain the hotel rights, the property rights, but the management company, which is ITC Hotels in this case, handles the day-to-day operations. Profits are shared, Capex put up by the owner. There's no Capex put up by the management company mostly, which is ITC Hotels, and brands are provided by the management company, which is it's branded under the ITC Hotels umbrella. Okay. Anything you want to add here?
Right, absolutely. And you know, as you rightly mentioned, it has a current portfolio of around 140 odd hotels.
Yes.
And the keys right now are at 13,000 odd keys,
yes.
of which, as per Jeffrey's report, 45 are owned at present and 55 are managed. But this 55 as a percentage will increase. And the margins that you were talking about, you know, we were discussing as to how the owned margins are around 45 odd percent, 35 to 36 odd percent, but the managed margins go up to almost 70 odd percent. So we'll have to see if management contracts go up, how blended margins will go up.
Correct.
In terms of the brands, well, in terms of, before we go on onto the brands, we have the target that the management has already given with respect to how they will expand their entire hotel category. They are planning to expand up to 200 hotels. So the total hotels that they will be adding in the next 5 years is roughly 60 odd hotels, 18,000 keys, of which the change in the mix of owned versus managed will go from 45, the owned will come down to 35 and managed will go up to 65%. In terms of...
Mahima, I just want to come in for 1 second here. Yeah. Let's look at that graphic one more time and let's flip back to the earlier graphic in current footprint. And this is what really stands out for me.
Yeah.
You look at the number of keys owned, around 5,800 currently in the owned space. In the managed space, it's 7,200. If I flip this forward, what we are seeing is that the ownership share is up only about 10% from now till calendar year 30. But look at the managed number. It's gone up by 4,500. This is where a large part of the re-rating is going to play out. So while it's only a 10% flip, but it's a very, very large, significant size increase that's going to come from here. Sorry.
Absolutely. And in terms of the brands as well, so if you look at the brands, it operates under 6 different brands. That is your ITC Hotel, Mementos, Welcome Hotel, Story, Fortune, as well as Welcome Heritage. Now, in terms of how these are divided, in the luxury segment, we have ITC Hotels and Mementos, where around 16 hotels and 16 hotels for ITC Hotels and around 4,700 odd keys. For Mementos, they have 2 hotels and 181 odd keys. And in terms of the segmental mix, right now ITC Hotels is 11% and Mementos is roughly 1%. Welcome Hotels, on the other hand, is around 19% of the total portfolio. So that's the biggest chunk where it comes to all of these 6 brands. In terms of Story, there are 7 hotels and 191 keys. So that's 5% of the total portfolio. Fortune is mid to upscale segment restaurant hotel, where around 56 hotels operate under this brand, and that makes up to 39% of the total portfolio. And lastly, Welcome Heritage, which is their heritage resorts, is roughly 24% of the total hotels, and roughly 35 hotels come under this particular category. In terms of the overall brand-wise inventory mix, if we see, there you go. This is the overall mix. ITC Hotel and Mementos is roughly 37%. Welcome Hotels and Story is roughly 24 odd percent. Fortune is 31%. And Welcome Heritage is roughly 8%. In terms of the growth target as well, management is focusing right now on Welcome Hotels, Story, as well as Fortune. So these will be the 3 brands where management contracts will take place, and these are the pockets where the growth will actually come from. So this is you know, everything that you need to know about the company per se, and then of course the parameters that we take up for you know, judging the company in terms of ratings.
Absolutely. Let's look at those. In fact, so we've kind of broken this down into parameters starting from income statement, balance sheet, cash flow, and in the income statement we'll also look at some operational metrics which Mahima has pulled out. Cash flow, return ratios. We'll thereafter look at shareholding, street cred, valuation, and street coverage. So that's how we'll break this up. Mahima, why don't we go with income statement?
Absolutely. So in terms of income statement, well, great set of numbers here. In terms of revenue, we see a 3-year CAGR of almost 39% for the counter. In terms of EBITDA also, the 3-year CAGR has been a whooping 157%. Plus, in terms of net profits as well, the company has managed to grow pretty well from FY24, where it stood at around 400 odd crores. It's gone to almost 698 crores in FY25. So great set of numbers there. Margins have slightly improved from 33 to 34%. But as we mentioned earlier as well, the management is has said that they will move to management contracts, which means that margins will definitely go higher going ahead. So the blended margins will definitely improve. But the question here is really that to what extent will they improve, and that's something that we'll be asking the analyst as well. In terms of operational metrics also, they have been on an increasing trend, an improving trend. The average revenue rate, the average room rate, which was around 12,000 in FY24 has gone to 12,500 in FY25. The RevPAR, which was around 8,200 in FY24, has gone to around 9,100 in FY25. Occupancy has gone from 69% to 73%, which has not been the case for hotels this particular year. This has only been seen in ITC Hotels. Otherwise, if you see IHCL, EIH, Lemon Trees, everywhere the occupancy has remained in that 68 to 70% range, but ITC has seen occupancy rate of 73% in FY25. In terms of the RevPAR that comes from premium segment, that is almost 30% of the total RevPAR. In terms of operational efficiencies also, the company has improved quite significantly. The gross food cost has been reduced to 24% from 27%, energy cost to 5% from 7%, payroll cost has come down to 21% from 28%, and other operating costs has also come down to 28% from 30%. In terms of the segmental mix where revenue is concerned, room contributes around 52 odd percent, food and beverages contributes around 40 odd percent, and the other categories around 8 odd percent. And they've also signed 54 hotels and 54 hotels in terms of last 2 years, and also signed 30 odd hotels for management contracts in the past 2 years. So that's the and that is one of the reasons as to why we've seen a significant amount of uptick in the financials of the company. So that's where
EBITDA especially. You look at that EBITDA number, it's very impressive. And Mahima, it's my understanding is it's two factors, and correct me if I'm wrong. One is the fact that your occupancy has gone up.
Correct.
So your fixed cost base remains the same.
Correct.
The number of people you employ in a hotel remains the same.
Correct.
But because your occupancy has gone up, the number of people residing there has gone up, that flow through to the bottom line
Correct.
is immediate. And that makes a big impact in terms of growth on the EBITDA number. So that's one. And the second thing is these reductions in costs. Give me perspective. So these reductions in costs are a percentage of top line.
Correct. As a percentage of top line, and that has been reduced. So the reduction that I'm talking about has happened in the past 4 odd years. So as a percentage of top line, and so as you were mentioning earlier as well, it's not just how these occupancy ratios have improved, but it's also the operational efficiency that has aided the EBITDA as well as the bottom line.
Sure. Okay. So that's on the top line. Very impressive numbers for sure. No contention there. Let's talk about the balance sheet. Now, no concerns here. They've got around 1,600 crores of cash. They've got a decent amount of equity size. Their borrowing is nearly zero, and there's no concern with regard to debt, because look at the amount of cash sitting on the balance sheet. It's 1,600 odd crore. That's part of the demerger. 1,500 crore was given over to an ITC Hotels. There's very little Capex that's planned in, or rather, compared to the quantum of cash it's generating, and therefore there's no concern with regard to this one. Let's talk about cash flow, Mahima, very quickly.
Right. So cash flows, again, a healthy set of numbers. It's improved from 670 odd crores to 803 crores in FY25. That is from operations. Even the ratio of cash flow from operations to PAT has improved. In terms of the net cash flows, they are also strong enough here. So I mean, overall cash flow position stays strong. Plus, the ITC as a parent company has also decided to invest some amount every year in ITC Hotels. So I don't think cash is a problem for ITC Hotels for now.
Perfect. I'd in fact want to know what they do with that extra cash that keeps coming in. That's what I'm curious about. Let's talk about return ratios though, because that's the other piece which is the key. You want your return ratios to be good, but we are not seeing double-digit ROE. Even ROC is just about double-digit. That's because of the pivot from owned hotels to managed hotels. That entire pivot is yet to happen. You'd want to see how much this ROC can go up by. Of course, it's an upward trend. It will likely go up as well, continue to go up, but at the moment it's falling short of expectations. So we've given this a thumbs down. Shareholding, Mahima.
Right. So shareholding, since the company is just listed, we just have the information with regards to March quarter, where promoters is roughly almost 40% of the total equity, FI is around 25%, DI 21%, and public shareholding 13%. But the overhang here is BAT, because BAT has sold stake in ITC but not ITC Hotels. Analysts are expecting that that might not happen for the next 2 to 3 odd quarters, but BAT still holds almost 15% in ITC Hotels. So that is one overhang where shareholding pattern comes into play.
That's a large overhang.
Yes.
That's a large risk as well. So something to keep in mind. Let's talk about street cred. Now, I did mention that this one will likely be a neutral because of the fact that while the performance since listing has been quite strong, what we're seeing is that what ITC's implied value per share was, basis tax disclosures that they had to make, was far higher than the current stock price, which is roughly at around 220. 270 odd was the number which ITC was penciling in, and 188 was the list price, after which the stock in fact went down by another 10 odd %. So, and thereafter has rebounded. So that's the nature of the way in which the stock has moved, and hence the neutral with regard to street cred. But Mahima, valuations, that's the most complex part of this.
Absolutely. So, you know, when I was seeing the valuations as compared to how peers are concerned, well, all of them are trading at very high PE levels, right? In terms of the MCAP to EBITDA level also, and the PE levels also, even going forward in FY26, FY27, for ITC Hotels, it goes to around 49 times in 26 to 40 times in FY27. As compared to that, IHCL trades at around 56 times right now, which might go to around 51 times and 43 times. So, I mean, both the top two players in this industry, both of them are very expensive. As compared to that, EIH is slightly less expensive, trading in that 30 to 35x odd range. And Lemon Tree is interesting here because of their addition of keys that they're going, you know, extremely high. That's one of the reasons as to why their PE is expected to come down to almost 29 times in FY27. So overall, all hotels definitely very expensive, and ITC is also not looking very cheap. So we've given a neutral rating here because as compared to peers also, it's trading in the same range. Let's
talk about how analysts are viewing this one. So street coverage. You have just about 4 analysts tracking this one with an 8% upside, so nothing material. We've given this a neutral and close this off. Let's quickly look at all of the KYC metrics that we have analyzed. The income statement, balance sheet, cash flow, thumbs up on all 3. Return ratios, definitely asking for more right here. 100%. What you want to see is shareholding pattern is a neutral because there's some bit of overhang from BAT. Street cred is a neutral because of what we just talked about. Valuations are a neutral because largely in line with the sector leader, which is IHCL. And if you're getting an IHCL at the same price, hey, why wouldn't you consider it? And street coverage is also a neutral. So it stacks up as a 5 out of 8 on our KYC ratings. But let's bring on board Mr. Prashant Biyani, who's the Vice President of Institutional Equity Research at and Sector Lead for Agri-Inputs, Sugar and Hotels at Elara Securities. Now, welcome on board, Prashant. Prashant, I want to first start off with trying to understand this model of owned versus managed. What should the margin expectations broadly be for ownership versus managed hotels? So just give us that context and thereafter give us the kicker from here. What's the expectation like in terms of revenue accretion from today for the next 5 years on ITC Hotels, and how much of that will come from managed?
Sure. So first thing on owned versus managed, while margins for managed hotels is good, it can range to the extent of 80% because on the management fee part, you don't have any major cost. At max, you will incur around 10 to 20% under few for advertisements and other purposes. But other than that, you have management fee business operates at around 80% EBITDA margin. But on the owned hotels, if you see, mostly the luxury hoteliers tend to earn margins of anywhere between 33 to 37%. But the key difference between the two is that the EBITDA from owned hotels is chunky, whereas the EBITDA from management fee business would be small in absolute terms vis-a-vis owned hotels EBITDA. So therein lies the difference between the two. It is not that one business model is better than the other. I think in India, the right model will be a mix of owned as well as managed. Because for every one hotel that gives you EBITDA, you can compensate that with maybe 7 to 10 managed hotels. So I think the right way forward would be a mix of both. And then answering to your second question, I think over the next 3 to 4 years, the ITC hotels revenue growth we are expecting is between 15% CAGR. And part of it will be driven by the hotel business, and some of it will also be driven by the sale of luxury residential apartments that they will start off from this year in their latest property in ITC Ratnadipa, which is in Sri Lanka.
Prashant, hi, Mahima also joining in. Just want to understand that because they have said that management contracts will go up to almost 65% of the total portfolio by FY30, what do you think the blended margins will go to? Because right now, owned hotels is roughly 35 to 36% of margins, but in terms of management contracts, that goes up to 70% in terms of margins. So then, where do you think blended margins will stand at?
Yeah, so we expect margin expansion of around 300 to 400 bips over the next 4 years. Certainly, part of it will be driven by growth in management fee. And then we will also see EBITDA accretion from the sale of luxury residential apartments, which is also a high margin business. So both of them will contribute to the margin accretion for ITC hotels.
Just do the rough math, Prashant, on an Excel file. 15% growth for 4 years takes me to a top line of around 6,300 odd crore. Around a 37% margin on that will roughly mean 2,500 crore of EBITDA. Am I right in kind of laying these numbers out?
So till FY28 or by FY28, we are expecting top line of around 5,300 to 5,400 crore for ITC hotels and EBITDA of somewhere between 2,000 to 2,100 crores. That would imply a margin of around 38% for the company.
Prashant, just want to understand right now the company is sitting on a cash of roughly 1,600 odd crores right now. The company has also said that they will invest roughly 300 crores every year in terms of Capex. That is around 8 to 10% of their total revenue. Plus, ITC is also expected to infuse around 1,500 crore post that demerger, which has still not happened. Just want to understand as to how this entire cash flow will be put to use.
I think that 1,500 crore from ITC has already been infused. So they have a net cash of around 1,500 to 1,600 crore already. And going forward also, I think the cash generation is likely to be quite good. So that is a concern from our side also, while cash on an isolated basis is good to have, but it also drags your return ratio. And if you look at their own hotel pipeline, right now they have a pipeline of around 400 to 500 keys in the owned portfolio, which they will start over the next 2 to 3 years. So I think as an analyst, I would like to see more properties on the owned side. If they opt for a greenfield expansion, then certainly I think on the luxury side, it will take at least 5 years to come up with something. So deployment of cash is something that Street will also be looking out for from the management.
Very interesting, Prashant, that you're looking at this from an owned angle when everyone's looking at this more from a managed hotels angle. Let me ask you, what's driving occupancy for ITC? Because Mahima was suggesting earlier in the show that the occupancy rates have gone up in a more significant fashion versus peers. So what's driving that in your opinion?
So the first driver for occupancy is the commencement of ITC Ratnadipa, which they started in April itself. So they started with 250 keys and now they have opened it full-fledged 352 keys. So occupancy ramp up at that hotel will be the key driver. Other than that, for the new hotels that they have opened since 2020, I think occupancy in those hotels have also not yet reached the optimum levels. So then that is the second driver, that occupancy ramp up at recently owned hotels. That will, and the third driver is that typically most of the hotels go for renovation after a period of every few years. So that generally leads to some of the room closures on a recurring basis. So once those renovations are complete, then that will also drive occupancy for the owned portfolio. So these are the main factors, and then certainly you have tailwinds in terms of hotel industry doing quite good. So these are the factors which is driving occupancy for ITC hotels.
Prashant, regarding the batch stake sale, because that holds almost 15% of ITC hotels, how much of an overhang do you think will that have on the stock, and till what time will that overhang continue? Do you think that BAT will come out and sell their stake in next 2 to 3 quarters, or there's still time?
That I think only BAT will be able to answer, but it will certainly be a overhang on the stock because I think 15% in a business which is not related to them, they would certainly would like to exit from the company. But timing, I think, is best would be best decided by them. But 15% is a large stake, and I think it may create an overhang for some time on the stock.
Prashant, if I were just to extrapolate the numbers, it's trading at around 20 times free cash flow FY28, or rather operating cash flow FY28, because we don't know how much Capex they'll put up. Is this looking expensive for you? How should you view it with a high level of certainty? This doesn't look too bad, right?
So we still, I think there is still some upside on ITC hotels, but I think we would rather than looking at from a cash flow valuation, I would rather look for more cash deployment. But I think we have a target price of somewhere around 230 on the stock. We have valued it on SOTP, valuing hotel business separately, and also the bifurcation of residential real estate business. So I think there is still some upside on the stock, but it may be subject to revising upwards, provided they provide us more clarity on the owned portfolio pipeline if they plan to come up with something.
Okay, thank you so much, Prashant, for joining us. That gives us great amounts of clarity with regard to how ITC will likely play out. And viewers, in fact, that's all the time we have as well. So from Mahima, myself, everyone who puts the show together, thanks so much for watching. Of course, ITC Hotels, do you like it or not? Something that we leave with you, but completely out of time on this one.